Thank you. Thanks everyone for joining us today. I'll take you through the newfound story. Some forward-looking statements today. So Newfound Gold, really it's about the jurisdiction, Newfoundland, top jurisdiction in Canada. We've got our flagship project, the Queensway project. I'll go over that in a minute, but it's got really a high-grade core. It's a phased approach, and so we're starting small to get cash flow and expand from there. We've just acquired and closed on an acquisition of Maritime Resources, where we acquired a producing mine that just started production, and milling facilities too that de-risk for us the Queensway project. So quite a strategic acquisition, and one, we're well funded. We've raised money through the year, and so we currently sit, well, at the end of September we had 87 million pro forma dollars in the bank, and have a new team in place as of December in January of this year. In terms of the jurisdiction, Newfoundland is ranked 8th in the Fraser Institute. The government extremely positive to want mines. They've said we want 5 mines by 2030. So the Hammerdown mine that we just acquired is one of those. Queensway will be another one. Permitting timelines, I'll give you a couple of data points. Hammerdown, when it went through its permitting process, got its permits in 10 months. Firefly, who is advancing the Ming project, got their environmental assessment certificate in 45 days. So the government really work with companies to make sure that when you apply, that you've got a fulsome application and that you've done the appropriate consultation with the communities. So we've done that, and we're advancing with the same engineers as what Firefly used, and the same, like putting our package together and working with government now so that we can apply in the new year. An hour around the Queensway project, we have a population of about 40,000, so a skilled workforce to pull from. And we have lots of infrastructure. So our project Queensway is 20 kilometers outside of Gander. We've got the Trans-Canada Highway goes right through it, and so does the main power line. We actually have to move it off the property, so we'll be able to pull from that. We've got an international airport and a port. So about as straightforward as a project as you can get. In terms of the team, December of last year was when the start of the change in leadership, change in direction. We wanted to take it from an exploration company to cash flow. That was the mandate. Paul Hewitt started as chair, and the total board is changed out since December. And so we've got a very strong and supportive board. Couple of last people to come on is Alan Palmiere, mining executive of many years. He came with the maritime transaction, and Andrew Fury. Dr. Andrew Fury was the former premier of Newfoundland and Labrador. So we have, again, lots of good support from the board. I started in January. I'm a 40-year mining engineer, and came out of retirement a second time because I saw this project and I thought, wow, this is going to be a lot of fun. And so that's what I do for fun now. So much fun. And so anyway, so I've done this a number of times, and it really is fun, and the people in Newfoundland are such a great people to work with that, yeah, it just, then you look at this deposit, and so it really was something that I wanted to jump at. The rest of the team all changed out except for Melissa, who was promoted to president in December from being the VP of Exploration. So she had found the deposit at Queensland, or was part of the team. And so we're going to continue to find gold. and everyone else is really directed towards getting to cash flow. And so that's what we're doing. So our capital structure, we closed on our acquisition, so now we have about 360 million shares outstanding, fully diluted, a market cap of about $1 billion, and 87 million in the bank as at the end of September. But we can see that in March, there was a disappointment in the market when we announced that first resource. The retail audience, that a lot of hype around how much gold was really there. There are very high-grade intersections that were reported, so I think people really had this expectation that was going to be a lot more. So with that reset, what we've been able to do is put together a plan now that really shows value creation, and with the help of the gold price, of course, we've seen a steady increase. And we've raised over $87 million this year. We announced the acquisition, we announced our PEA, and then now we're announcing our exploration results from our drilling and channel sampling that we're doing on site. So in terms of the combination, what assets do we have? Here we zoom in. So Queensway project in the province. This is, whoops. Well, this is the Queensway project. And then we acquired the Hammerdown mine. It's an open pit mine, higher grade. It will ship or truck ore to the Pine Cove mill. And we've also acquired the Nugget Pond mill. And so as part of our PEA, we're looking at phase one of a small mine trucking all the way to the mills from Queensway. And people say, well, how far is that? 250 kilometers. And then when I translate it, 250 kilometers, transport and processing is about 0.5 gram a ton. We're looking at shipping 9.6 grams a ton as part of our phase one. So again, some very good grade, high grade from that. So being in production at Hammerdown, they just poured their first bars last week. We're now a producer. So we've gone from exploration to production inside a year. We're producing, we're ramping it up, so we'll have cash flow next year. And that is really meant to be the equity portion, if you will, of our project financing for phase one of Queensway. So let's have a look. What have we got as assets? We've got the Hammerdown mine, which I described, the Pine Cove mill. It's a mill that's processing Hammerdown of 700 tons a day. It's got a nominal capacity of 1,300 tons a day. We acquired also the Nugget Pond processing facility, or gold circuit. And Queensway, we said we're going to phase it. 700 tons a day, 9.6 grams, 69,000 ounces a year at less than $1,300 all in sustaining. And, excuse me, for 155 million. That cash flow then will build 2,000 ton a day, or sorry, 7,000 ton a day plant, and will generate 172,000 ounces a year. So that's how we're going to grow our production to over 200,000 ounces with the combined mines. And this is really, my favorite chart here. There's that 69,000 ounces, the 172,000 ounces, and this back end here, we expect to fill with higher grade discoveries. So I'll point to the beige bars that you see on the chart. That's the underground portion. So just keep that in mind when I show you another picture. And then you'll also see some really exciting exploration targets that we're drilling right now. Lots of leverage to gold price. We did our base case at $2,500 per ounce. However, when you increase it to $3,300, which was the top end of this one, you get $1.5 billion project of just Queensway at a 200% IRR. We set out a plan and we're delivering on it. We have lots of activities going on to support the development of Queensway. Phase 1 permitting next year, that's 26. We'll get our early works permit to start clearing towards the end of next year, but then construction in the first half of 27, with production from Queensway in the latter half of 27. So by the end of 27, when you add the production from Hammerdown, we're targeting over 100,000 ounces. And as a result, we'll expect a re-rate. First 100,000 ounces, then once phase 2's done, 200,000 ounces. So I'll just walk you through a few slides here that show the property at Queensway and over at Hammerdown. We've got some neighbors. We did acquire as well these Firefly properties to extend our property package along the main fault zones. That'll close, is expected to close by the end of the month. Our property is 110 kilometers long with the two main fault zones that are the plumbing system for the gold. We zero in on the resource. So that's where you see that 2 million ounces of just over 2 grams in a number of different pits, which are the vein clusters of the high grade. And so that high grade I'll show you, and we'll really focus in on Keats and Iceberg and Keats West to show you that we've got this high grade core. Here you see the block model at 0.3 cutoff. So when you increase it to 2 grams per ton cutoff, what you see here is the high-grade core where 75% of the ounces are in 25% of the tons, so the quartz veins. And you can also see just how continuous those high-grade chutes are. And in this pit here, they start at surface and they go all the way down to the bottom of the pit, about 250 meters, and then they continue into an underground scenario. They've been exposed at surface. We can see the quartz vein when you actually just walk along it. You can see the size of the quartz veins. They're very visible. The visible gold is in the vein. You can walk along and see the VG. We did channel sampling on Iceberg. We announced these results about a month ago. You can see the high grades, and they're expected along those high-grade veins. So that's what we have modeled in our resource model. We exposed Lotto, so it's a very systematic approach. When you deal with the narrow veins and high-grade veins, you want to make sure 75% of the ounces and only 25% of the tons. You better get it right. And so that just, it's the gray hair and the scars that I have from operating these kinds of mines that tell me you want to make sure you get it right. So there's a mine design, fairly typical, except that we've actually got to move a power line off of it, which is the red line, and so we're going to, reroute it to where the yellow dotted line. The white line is the Trans-Canada Highway, so we've got great access to infrastructure. And here's that underground potential. You see that, there's not a lot of underground. We've done drilling below the underground all the way down to 1,000 meters, which is in this area here. So all the way down to 1,000. We know the system is open all the way down to 1,000. So remember those beige bars. There's lots of room there to increase production from that. 11 kilometers to the north, we have Dropkick, and this is, for us, this is the really exciting target. Let's turn it around. Anyway, you can see the grades, how exciting those grades are. And, excuse me, and we announced more. So we've been drilling there since June, and we're very excited at what's unfolding here. 11 kilometers to the north of where the mine plan is. So 110 kilometers, it's camp scale. There's the resource area here. There's Dropkick here. We've seen grab samples, high grade on surface in and around. So we got lots of things to look at, and 60 kilometers to the north, more to look at. So watch this space. High grade, production, camp scale expansion. Thank you.
Thank you, Keith.